Hey everyone, and welcome to this note. I am absolutely thrilled to have you here today. We're going to be embarking on a pretty definitive journey. We're talking about transforming from merely understanding the paradigm shift of digital money to actively building, innovating, and really monetizing your skills in Web3. So whether you're a total beginner or an aspiring entrepreneur, consider this your professional mentorship session. Let's get into it. So, what if money didn't actually need a bank? Think about it. For decades, our entire global financial system has relied completely on centralized trust. You trust a middleman, bank, a payment processor, a government, to mediate disputes, hold your assets, and control the supply of fiat currency. But that centralized model has a massive, glaring flaw. It controls you. It charges you fees, and it can endlessly print more money, which basically dilutes your purchasing power. Now, for years, technologists tried to create digital cash to solve this, but they kept running into the double spending problem. Basically, how do you prevent someone from copying and pasting a digital dollar the exact same way they copy a digital photograph, without using a bank to verify the ledger?
Well, that is exactly what we're going to answer. Here is our roadmap for this note. We'll be covering 1. The paradigm shift, 2. Bitcoin and blockchain, 3. Beyond Bitcoin, 4. The builder's blueprint, and 5. The future frontier.
All right, let's jump right into part 1, the paradigm shift. Before 2008, every attempt at digital cash basically hit a brick wall. Then, out of nowhere, an anonymous creator named Satoshi Nakamoto published a white paper that literally changed the world. It proposed a breakthrough solution, a true peer-to-peer software network that allows value to move globally over the internet without permission, without a middleman, and relying entirely on cryptographic proof instead of centralized trust. It was a total game changer.
So let's demystify that massive buzzword you hear literally everywhere, blockchain. Honestly, just think of it like a physical bank ledger, a record book of every single transaction. But instead of being locked away in some corporate server room, it is totally public, and it's maintained by tens of thousands of independent computers around the world. We call these computers nodes. Everyone holds a copy, and everyone must agree on a single valid truth. So you aren't trusting one person, you're trusting the network.
Okay, let's break down the exact architecture flow of how a transaction actually works under the hood. Step 1. You send a transaction and it's broadcasted to this sort of waiting room called the mempool. Step 2. Nodes verify its validity. They check that you actually have the funds using what's called the UTXO model, which is essentially making sure your digital coins haven't been spent yet. Step 3. Specialized computers called miners compete to solve a really complex cryptographic puzzle known as proof of work, and it takes massive computing power. Finally, Step 4. The very first miner to solve it packages those transactions into a block, links it chronologically to the previous block, and adds it to the chain. Once it's there, it is mathematically secure and virtually impossible to alter. Now, this brings us to a super fascinating shift when it comes to privacy. In the traditional banking model, institutions keep your identity in the ledger hidden behind closed doors. But Bitcoin introduces this brilliant new model. The ledger, the transactions themselves, is entirely public. Anyone in the world can verify them. But your identity is firewalled. The public only sees anonymous public keys interacting. So it effectively breaks the flow of information, keeping you private while keeping the whole system totally transparent.
All right, the absolutely crucial takeaway here is just one number, 21 million. This introduces the really profound concept of digital scarcity. Unlike traditional fiat currencies where central banks can just print an infinite amount of money to cover deficits, which by the way weakens your purchasing power, Bitcoin's maximum supply is strictly pre-programmed in its code. There will never ever be more than 21 million Bitcoin, period. And funny enough, because people lose their hard drives and their passwords, the actual number in circulation will always be even lower than that. It is a digital asset that simply cannot be inflated away.
And this digital scarcity, it's enforced by a really clever economic mechanism known as the halving. See, miners get rewarded with newly minted Bitcoin for securing the network, but roughly every 4 years, or exactly every 210,000 blocks, this reward is programmatically cut in half. Way back in 2012, it was 25 Bitcoin. By 2024, it dropped to 3.125. This systematic reduction naturally decreases inflation over time and continuously drives up the scarcity of the asset.
Moving right along to part 2, the Beyond, Ethereum and Web3.
So we've firmly established Bitcoin as decentralized money, but what happens when we use this exact same tech to run complex applications? To really understand that, we have to look at the evolution of the internet. Web 1 was the early internet. You could read information, and well, that was pretty much it. Web 2 is what we mostly use today. You can read and write, creating content on platforms like YouTube and Twitter, but those big platforms own your data. Web3 represents a massive structural shift. It is read, write, and own. For the first time ever, users actually own their digital identities, their data, and their assets through cryptography.
This concept of true ownership is powered by smart contracts, which were largely pioneered by the Ethereum network. A smart contract is literally just code that automatically executes an agreement when specific conditions are met. No lawyers, no intermediaries required. This single innovation is huge. It allowed developers to build decentralized finance, or DeFi, which completely recreates lending and borrowing without banks. It also paved the way for NFTs, creating actual digital ownership of art, assets, and data.
All right, let's shift gears. Part 3, the builder's blueprint.
Listen, the absolute biggest generational opportunities in this space are found by building businesses, not just passively investing. The investor mindset is pretty passive, right? You buy an asset, you follow the hype, and you just hope for market returns. You are totally dependent on the market. But the entrepreneur mindset, that is proactive. You solve unmet needs, you create assets, and you build digital systems that generate real cash flow completely regardless of market conditions.
Take a look at this income potential matrix. It basically cross-references specific skills against how hard they are to learn and their market demand. Look at content creation. It has a low barrier to entry, but super high demand. Community management, medium difficulty, high demand. And if you take the time to learn blockchain development, sure, the difficulty is high, but the demand is absolutely astronomical. Think of this matrix as your personal menu for entering the digital economy.
Let's rapid fire through a few real-world paths to making digital income that you can literally start today. Freelancing is absolutely booming in Web3. You can offer specialized writing, you can manage Discord communities, conduct deep-dive blockchain research, or even offer specialized consulting. Every single new crypto startup needs these skills, and very, very few people actually understand the industry well enough to provide them. Your knowledge is a highly monetizable asset right now.
Which brings us to Part 4, the future frontier. We are right now watching the ultimate convergence, decentralized networks colliding head-on with artificial intelligence. And here's the thing, AI doesn't replace the modern crypto entrepreneur. It dramatically amplifies them. Using an AI and blockchain playbook, you can supercharge your ability to analyze complex on-chain market data. You can automate your content workflows to build a massive educational business. You can use AI to manage your SaaS platforms or handle customer support for your Web3 community. AI is quite literally the ultimate leverage for the modern digital builder. Okay, let's tie this whole thing together into a powerful mini recap of your complete digital economy roadmap. Step 1, build your knowledge. Actually read the white papers, understand the UTXO models, learn how those smart contracts work. Step 2, practice your skills. Set up a wallet, try using a DeFi protocol, get your hands dirty. Step 3, create content. Share what you are learning online to build an audience and a solid portfolio. And finally, Step 4, launch your business. Monetize your expertise through freelancing, consulting, or creating digital products. I want to leave you with this really empowering reminder. The story of Bitcoin is not merely the story of a cryptocurrency. It is the beginning of a broader transformation involving money, ownership, and human collaboration. You see, you are no longer just an observer. By understanding the actual mechanics of decentralized trust, scarcity, and Web3 architecture, you are now completely equipped to participate in and truly thrive within this massive technological paradigm shift.
So the ultimate question I've got to ask you at the end of this note is simply this. What will you build in the digital economy? The tools are open source, the networks are global, and the opportunities are entirely decentralized. It is time to take everything you've learned today, step into the arena, and start innovating. Thank you so much for joining me in this masterclass note, and I honestly cannot wait to see what you create.